Hi everyone, this is the first assignment video for the quarter. Basically, the assignment videos are going to walk you through sample problems, which will give you a better idea to how to complete the problems each week successfully. The assignment videos are not mandatory. I've had some students say they don't help them. I've had more students say that they do help, but it is really up to you. It helps provide a lecture component, and with online classes, especially in accounting, sometimes reading the textbook and looking through the examples in the textbook just does not help it make sense. So I would definitely give the videos a try for the first couple weeks while we get the principles down. But again, it is completely voluntary. I'm not going to quiz you over what is on the videos. So if they don't help you, don't watch them. If they help, please continue to watch them. That's pretty much it on the assignment videos. When you do your homework assignments, make sure you look at the bottom of the Excel file and get all of the tabs. There are numerous tabs on each file because I have broken down the problems into smaller increments. For example, on the mastery problem for week 2, I've broken it down by requirements. Parts 1 and 2 are on one tab, part 3 is on its own tab, as well as part 4 and part 5. That way it doesn't seem too overwhelming to begin with. So make sure you look and scroll through the tabs. To scroll through the tabs, you're going to look at the bottom of your Excel screen where it says ready. You're just going to click on the 2 arrows. The left will take you towards the beginning of the tabs. The right will take you towards the end of the tabs. So make sure you do check that each week. So let's get started. Since you have the A problems this week, I'm going to show you the B problems. So for exercise 2-2, you're given the accounting equation, which if you've read the chapter or if you have some experience with accounting, you'll know assets equals liabilities plus owner's equity. Owner's equity is capital, revenue, and expenses. Liabilities are basically money that your business owes to another business. And then assets is what the business actually owns at any point in time. So it could be office supplies, it could be the cash in the bank, it could be inventory in the warehouse, whatever it may be. Those 3 always fit together in a transaction. Your assets, what you have on hand, has to always equal what you owe plus what the owner has invested or taken out of the business. So if the transaction gets out of balance, then you know there is a problem in your financial statements and you need to go through and look through the information. But for this case, it's going to be pretty much standard math. So we don't have the asset amount, but we have the liabilities and owner's equity amount. So what we're going to do is we're just going to add those 2 amounts together. 20,000 plus 5,000 is 25,000. So your assets are going to be $25,000. Even if the math seems incredibly simple and you can do it in your head, I would encourage you to use a calculator, because if you mess up by a penny on your calculations, it can throw your entire problem out of balance and cause you immense amount of headaches and frustration. So even if the math seems easy, I would use some type of calculator, whether it's on your phone or on your computer like I'm doing. So just to give you a heads up. So here we have assets of 30,000 and liabilities of 15,000. And we need to figure out owner's equity. So we know that assets equals our liabilities plus owner's equity. So it's going to be a standard mathematical. If you know 2, you can figure out 1. So we're going to have our 30,000. We're going to subtract the 15,000 in liabilities. So that gives us $15,000 in owner's equity. So now we're going to do the same thing with the last problem. We know assets and we know owner's equity. So we're going to take our asset amount, subtract our owner's equity amount, and that's going to give us how much we have in liabilities. And so that's how we're going to complete the first problem. For 2-3, we are given 4 different transactions. And so we need to work through those transactions. This is where we really get into accounting, because accounting is really all about making sure you put the numbers in the correct location. The math comes second. What really can mess you up is if you put the amounts in the wrong column or in the wrong account. So this is where we need to start paying close attention to detail and make sure we read slowly so that we're absorbing everything. So the first transaction is we invested cash in the business of $30,000. So we're just going to put in $30,000 for the asset, because cash is an asset because we have it on hand. Even if it's in the bank, it is considered on hand. Since we invested cash, that is going to be owner's equity because the owner put the money in. So that is going to be $30,000 as well. The gray spaces are where you're going to keep a running balance. You're going to be keeping a running balance throughout the entire quarter on various accounts. So you just want to make sure, like you do on your checkbook, after every transaction, you find the total. In this case, since we're doing a double entry, every transaction is going to affect at least 2 accounts. And so we need to make sure the equation, both sides of the equation, are equal the entire time. So if you look at the top up here, it says your assets equal your liabilities. So we're going to have to make sure. So we have 30,000 and then 30,000. So far so good, both sides equal. Now we bought office equipment. Office equipment is an asset, so we're going to increase our assets by $4,500. Since the transaction says on account, we're going to automatically know, since we purchased it and we put it on account, it's a liability. It's what we owe to another business. And then we're going to complete the total again. So we have 34,500, 4,500, and 30,000. So 4,500 plus 30,000 is going to give you your 34,500. So far, we're still balancing. Transaction C, we bought office equipment for cash. So this time we're just affecting 2 different asset accounts. So we're going to increase one asset by $1,600. We're going to decrease cash for $1,600. So essentially this transaction cancels each other out when doing the math, so we know exactly what we have. So we're just going to use the same amounts as last time. Then the final transaction for 3B is we paid cash on account to a supplier. So we paid cash, so we're going to decrease our asset of cash by $2,000. And then we're going to decrease what we owe. So we're going to decrease $2,000 from the $4,500. And so then we're going to do the math. Again, I would recommend using a calculator, but it's pretty straightforward math. So we have 32,500 equals 2,500 plus 30,000. So, oops, it's 30,000. So far, again, everything balances. So this is how you do the first two problems for this week's homework. If you have any questions on it, please let me know.